Rob Tetros with Canaccord Genuity, and he joins us with his outlook for the equity market. Rob, I mentioned those all-time highs for the TSX, the interest in commodities recently. What's been your assessment of the stock market?
Yeah, thanks for having me on, John. Great to be here on a Monday morning. This market, I'd say, for me, has been like the overall theme has certainly been liquidity, blinders on. Let's just keep moving forward. A bit of de-risking we're now starting to see moving down kind of the risk spectrum. Overall, I do think that there's a bit of a potential overbought situation, which we could be fronting or getting into here. But overall, this market, you just can't be short. You just cannot be short. This market is so powerful right now.
What's kind of a good example of that? Sort of an anecdotal example where you might have thought it was a good time to maybe move away, and then it ultimately showed continued outperformance.
Man, it's crazy, John. I'm on the retail side, right? So I talk with a lot of individual investors, business owners, individuals who, perhaps they sold their business or they're in a cash position. And I've talked to so many over the past year that have told me I've been in cash since April. I've been in cash since June. I've been in cash since September. I've been in cash since October. And all of those situations, all of those individuals, there's a lot of them out there that have just missed out on all this. And the anecdotal story there is I see it with my own eyes as I meet people regularly. They've been in cash. The opportunity cost, John, to have not been in the market over the last 3 months, 6 months, 9 months, has been greatly outweigh any potential benefits from trying to time this market, right?
No doubt. At the same time, I mean, we all have to have a certain level in our life, a certain level of conviction in our life. Otherwise, what's the point? You mentioned some areas of the market that you think look overbought. What's your biggest area of concern right now?
Well, I certainly don't want to ring the alarm bells here, John, because again, I do think it's important to be long this market. I do think tech's likely going to pull back. You talked about it just before I was on here with the correspondent, but I do think that you're going to start seeing, like, clearly the SPACs, the IPOs, those have pulled back a little bit. There's way less appetite for that. You look at Cathie Wood's ETF, right? You're seeing that subsector, the fintech, the kind of the e-commerce, the emerging disruptor stocks and the small cap and the micro cap that have seen less and less appetite. Those are all kind of coming down. We're seeing new all-time highs for the S&P and the TSX, and we're seeing the NASDAQ kind of slowly kind of just stay afloat and last week a negative week relative. So I think you're starting to see some sectors on the risk side that are moving down. So you're starting to see some appetite now for Canadian banks and REITs and telcos and industrials and basic metals, and you're seeing less and less appetite, I think, for the 10 on 10 of the risk spectrum.
Well, I think it gets into another conversation point, especially, for some of those investors that you've been talking to who maybe have been sitting in cash. I think that the challenge has been traditional bond market returns have not been what investors have been able to get. So they certainly might look to the stock market to get some of those returns. When it comes to yields, there are obviously some sectors, you alluded to banks, where dividends are pretty reliable. Can you give us a sense on how you're looking at some of those types of pay, the bond proxies within the stock market?
Yeah, I think you look at pipelines, utilities, and telcos there as the three kind of in Canada that you're trying to get slightly better yield. And pipelines right now, depending on what your opinion is on the ESG side, leaving that aside, pipelines right now are certainly the most attractive just on a straight earnings yield relative to earnings and where we're kind of sitting right now. Utilities and telcos, the yields have come down, the purchasing has gone up. So we're seeing a lot better yield in pipelines, and that would definitely be an opportunity for the Canadian retail investor who's looking to get a nice dividend tax deal, a tax-efficient dividend yield, perhaps in his corporate account or in his non-registered account. Those pipelines are definitely looking a lot more attractive than historically. What happened is pipelines, utilities, and telcos used to trade at roughly the same yield, or in fact, pipelines would trade slightly less yield if you go back more than 5 years, if you go back 10 years or 20 years, and that there's kind of a split now. There's kind of a dichotomy, and we think that there's going to be an opportunity there, and eventually those yields are going to come back down, reversion to the mean.
Speaking of moves or coming back, I've noticed investors coming back to gold to a certain extent. But within the materials group, you've also seen this really strong performance in forestry related stocks. I know everybody in this country is always curious about how high home prices can go. But what about this lumber boom? I mean, how high do you think lumber prices can go after this massive surge?
Yeah, I think it's a bit of a bubble, John, and I'm sure you've had guests on your show say that before. And I do think that you just can't have this. Now we're seeing production come back on board. You're seeing full production, 100%. Like we had that glut of supply, which was an extended glut of supply for a good 6 to 9 months. Then we saw immediate home building ramp up. You had that huge glut. You get a crazy, it's the tulips, right? It's not quite the tulips, but it's almost the tulips. And now we're seeing the CapEx and the inventory numbers are now reflective of a situation which should see that. Now, I don't think it's a bubble that it'll pop and lumber will go back down to a quarter of the price that it was now. But I do think you should expect to see on the retail side, if you're buying, and on the home price side, if you're building, you should expect to see those numbers come down, I'd say significantly from the prices we're currently seeing per ton or per lumber foot that we're seeing right now.